Dear students, dear friends, welcome to Shasha's Virtual Classroom. Today we will focus on important points in income statement. So they are very important in the sense that most of the students they commit mistakes. Often they think whether we have to how to treat a particular item. So to start with, important considerations in preparing income statement. So income statements are prepared in vertical form since it makes them easier to read. You should study and learn the vertical form carefully until you are quite familiar with it. So there are various forms. There is a horizontal form also and there is vertical form also. But 99% of the cases you will be doing vertical form. So you will be preparing income statement in vertical form. So it is very essential for you to study and learn the vertical form carefully until you are quite familiar with it. Okay, so that you can work out the problems with ease. Do not prepare journal entries for the income statements unless you are specifically asked to do. They might have been shown in the chapter simply to help you understand how entries are made. Okay, so there are so many entries. If you look into the chapter, uh, income statement chapter, you will find couple of entries. They are not important in the sense they are not important. So you don't have to prepare unless otherwise they are asked for. So you can just know it. So in the examination, unless otherwise they are asking you to pass journal entries, you are not supposed to do it. The heading is important. Okay, so the heading when we start any problem, the first thing the heading is very important. The fact that it is the income statement for the year or months ended. So we have to write it as income statement for the year ended. The statement covers a period of time, so it is necessary to state the period covered. Okay. Goods taken by trader for personal use. Some goods, sometimes the trader may take out some goods for his personal use. So what we have to do, deduct goods taken by the trader for personal use from purchases and add to drawings at cost price. So they would have given selling price also. So you should not get confused. You have to always deduct at cost price. You have to deduct goods taken by the trader for personal use from purchases and add to drawings at cost price. So the adjustments will be reflected two places. Carriage inwards. Carriage inward is taken as part of cost of sales, not an expense. Okay. So carriage inward is what is carriage inward? Carriage inward is the amount spent on getting the goods inside the premises where goods are being traded. So that is why they are called carriage inward. So to bring in the goods inside for the trading purpose. So that's why they should be added with cost of sales. To sell the good, those are the expenses incurred to sell the good. That's why they are added to cost of sales. We should not treat it as an expense, like expense in the sense which we have to show below the line. So it should be considered as part of cost of sales. Carriage outward. The cost of delivering goods to a customer is carriage outwards and is debited in the income statement as an overhead expense. Okay. So it is debited as an overhead expense. Double check the treatment of carriage inwards and carriage outwards. So carriage inward will be reflected in cost of goods sold and carriage outward will be reflected in overhead expenses. Wages treated at the cost of sales. So goods purchased may not be in a suitable condition for selling to customers. Sometimes what happens, they may buy the goods and they may do some work on it. So further work may be required to them before they are sold. So maybe some rectifications will be there or some final touches should be remaining. Some work is pending. So on that you may spend some money. So the wages paid to employees for performing this work. Which work? The additional work on the goods. Okay, so this work should be debited as part of cost of sales. So those that particular part of expenses, the costs which are incurred to improve the product, they should be treated as part of cost of sales. Gross profit. The gross profit is the profit earned on selling goods before any other expenses are taken into account. So Sales minus sales returns will give you net sales or net revenue. So to that you have to, from that you have to subtract all cost of goods sold. So what is cost of goods sold? Cost of goods sold is nothing but opening inventory. To that we add purchases less purchase return. So to that we add carriage inwards, and from that again we subtract the closing inventory. So what we get is cost of goods sold. So what you have to do from that, once from net revenue we have to take out cost of goods sold, then what we get is profit. So gross profit. So what is gross profit? Gross profit is the profit earned on selling goods. Okay, the profit earned on selling goods before any other expenses are taken into account. When there is no trading account, when there is no trading, there is no gross profit. Remember that. It's very important. Okay. Some cases you may be asked to prepare a statement, income statement, where they would not give any opening inventory, closing inventory, even purchases may not be there, sales may not be there. For example, in case of service industry, service people who are rendering services, service business, they may not have any inventory. So then in that case, gross profit, the question of gross profit doesn't arise. The words cost of sales and gross profit are important and should always be shown. Okay, so never miss out. In a hurry, what most of the students they do, they forget to write cost of sales as a heading. They forget to write gross profit. So that should be avoided. So you should be very careful. So you have to write it. So the words cost of sales and gross profit are important and should always be shown. Should means it is mandatory. Always include the words cost of sales and gross profit in full. So avoid using short forms. So you cannot write COS, GP or something like that. So you should not use short forms. You have to use full form. You have to use full words. Include the words full word. Okay. So you cannot use the shortcuts. Any other income, you should add any other income to gross profit. So suppose you have got other than sales, if you have got any other income, you have to add it to the gross profit. Never treat it as a negative expense. Negative expense means don't deduct it from expense. Never do that. So you should not show it as negative expense in the expenses column. You have to just add it to gross profit. So because that is also income, but it is not from trading, it is other income. So that's why it should be added to gross profit. Overhead expenses. So we have to, after you add up other expenses, there are overhead expenses which uh, you have to show. So there is no particular order in which overhead should be shown in the income statement of sole trader, but it is often best to place the larger amounts before the smaller. So there is no particular order. It is not mandatory that you have to show it in particular order or something like that. But it is often best. It is a practice, best practice to place the larger amounts before the smaller, so that you show the bigger amounts first, then you show the smaller amounts. It is also a good plan to group together similar kinds of expenses. For example, property expenses, rent, heating and lighting, and insurance. So you can club up the similar type of expenses and you can show. There is no such prohibition that you have to. So, and this is not compulsory. So this is what do you say? It is an option. So it is better if you do it. So the examiner will be impressed. Profit for the year figure. The profit for the year figure is important. You will need to use it when you prepare the next document, the statement of financial position. So profit for the year, you have to show. The profit for the year is important. You have to show after the end result is profit for the year. You will need to use it again when you prepare the next document. So the next the chapter after this is statement of financial position. There you will be using the net profit whatever you calculate. Other chapters where income statements is prepared. See, income statement is very important. So it's very important in the sense, again uh, study accruals and prepayment, this is another lesson. So another chapter, the matching concept. So in this also, we incorporating this, you have to prepare income statement. So again, there is one more chapter, provision for depreciation of non-current assets. Again, there also you have to incorporate the depreciation and you have to prepare income statement. Irrecoverable and doubtful debts. Again, there is another lesson, another chapter called irrecoverable and doubtful debts. There also you have to incorporate these things and you have to prepare income statement. So this is the income statement is the base. So to that you have to make lot of other adjustments. So incomplete records. Even in case of incomplete records, you may be required to prepare income statement. Not for profit organizations. See, not for profit organizations means clubs and societies. So there may be a bar or cafe or something like that. So there they may be doing some sort of business. They may buy some inventory, they may sell something. So all those things. So even there you need to prepare income statement, and you have to show it as income. There also you need to. So it is very important lesson. So very important. So but this is the base, and you have to learn all this as a comprehensive. So that is where lot of students commit mistake. So you have to be very careful, you have to be very attentive. You learn each and every aspect, learn every lesson carefully, learn every chapter carefully, work out all the problems before attempting the main examination questions. You have to be double sure, you have to be thorough in these particular aspects. Income statement is prepared in different forms. See, there are partnership account. There also you have to prepare income statement, but the profit is shared between the partners. So that is one difference. An introduction to the accounts of limited companies. There also you have to prepare income statement, but the format is entirely different. The form is entirely different. Manufacturing accounts, where manufacturing account means there are so many other aspects. There are a lot of details given about manufacturing entity. So there also you have to show a lot of other aspects, and there also you have to prepare income statement. So income statement is overall it's very important, and lot of questions are asked from income statement. So you have to be it's very important topic. Okay. Income statement of service business. See, people who sell their services such as accountants, lawyers, dentists only require income statements. So they don't need trading accounts. So that is there is no question of preparing finding out gross profit, because there is no trading. So if the business is a service business, one which does not buy and sell goods, then there will be no cost of sales. Okay, there is no cost of sales. You will need to show the income, which will be the fees received less the expenses, to leave profit for the year. That's all. So it's very simple thing. Okay. So keep these points in mind. This is very important. So then in the next lesson we will start with working out the problems. Okay.